Good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, February the 21st, 2022. As I had suggested yesterday, depending on the market movement after globex opened today, I would come in and make a quick update, and that is the case. The NASDAQ opened down about 400. It's rallied back some, but now it's beginning to head lower. The Dow opened down 400, it's now down 562. The NASDAQ pretty much opened right where it is, rallied up a little bit, now coming again back down, while the Russell is also now down 41. As I'm sure everybody's already aware, Putin has moved troops into the occupied area of the Ukraine, the Russian separatists, blah, blah. But in any case, it is, I think, as expected. So we'll see what happens. But in terms of the market, it is continuing to follow my current analysis very cleanly. In fact, let's just jump in so I can then maybe spend a little bit of time on the bigger picture now that we have a little bit of extra update here today. There we go. Let's try that. Where I had left it off yesterday, we were coming off in the sequences of the 4 and the 3, 4, 5 sequences. So finishing the third wave and then doing a fourth and then coming back down and then doing a fourth and etc. So we had one and then we had another and then we have this third one, which is from this level. So what we're now completing would be the subminute wave 5 to complete the minute wave 3. Then again, we'll have an additional minute wave 4 and minute wave 5, and that will be finishing the intermediate wave, the minor third wave of C. And then we'll have an additional 4, an additional 5, and that will then complete the C wave as I'm labeling it, a C wave. I've gone back over this. Now I'm going to start here on the 4-hour chart. And what I want to make it very clear is that the size of this initial leg down. And so what we're looking for is the next, even if this is a C wave, and if I change this to a wave, an intermediate wave 1, and this is intermediate wave 2, it's still going to be that 5-wave decline. So whether it's a third wave or a C wave, it should be of the same intensity and size. So if this wave, you can see the size, this one would be equal to 100% of that A wave at 12,188. That's where it would be 100%, equal in length to the A wave. My feeling is that the C wave should come in 1.618 times the length of that A wave, and that takes us down to 10,292. Now, I'm not saying that this is what's going to happen, but thus far, the market is performing within the structures that I am labeling. And that, to me, keeps alive all of these additional declines that I'm looking for, and now keeping into a possibility of just taking a look at the size. So remember that under Elliott, I've talked several times on that what really becomes important as you're counting is, does it look right? Does it feel right? And so in this case, I'm looking for an intermediate degree. This is an intermediate degree decline. Either it's wave A or it's going to be, I'll back it out and we'll make it an intermediate wave 1. So this is intermediate B. Those followed pretty good Fibonacci and everything kind of lined up nicely for that correction. So as we start to unfold, we are still in a minor third wave, which began up here at 15,068. So that minor third wave, once I can get a fourth wave in here, then I'd be looking for, I can connect the top of wave 3 to the bottom of wave 3 and then to a 4, and we can get that 5th wave. But just initially, I am now believing that this minor third wave, which which began there, is the one that should reach pretty much without problems down to that 12,188 level, all the way down to here. That would be this minor. So the minute third wave, which is the one that we're looking to get close to completing now, we're in that subminute fifth wave of the minute third, and we've kind of gone through some support levels here. So we went through 618, which would be a common stopping area, and that was at 13,643, we'll call it. So the next one is 13,570, and then we have 13,502. Now, my thought process is, again, that it's going to come out to this 618 level, which doesn't really coincide with that, but the 100% right underneath it does. So that would be where the fifth wave would be equal in length to the third wave. That would be very acceptable. And the first wave is the shortest, so we're not running into any rule violations here. And so I am now believing that this fifth wave has a bit more to go and should end up somewhere down 13,360 to 13,325. Then we will finish that minute third wave. We'll get a minute fourth wave, which would be a fairly decent bounce. If we thought last night's or yesterday afternoon, last night's bounce was a good bounce, which took us all the way back up to there, this fourth wave will resemble it. In fact, this minute fourth wave, wherever this ends, it would find its terminus, its endpoint, within the price territory of the previous fourth wave of one lesser degree, and that's going to be right back up in here. So if we're coming down to here, we can rally back up to above 14,000 and then decline again. Now, what we have working against that is we're going to have a continued pressure, as now this whole affair going on in the Ukraine is beginning to escalate again. And now we're seeing that they're moving troops into the quote unquote occupied territory. Those are the Russian separatists that they believe that they want to be a part of Russia. So Russia's going to accommodate that and go in and protect their citizens. However this wants to be worded, it's now turned into a political game and the rest of that nonsense. But how will that affect our market is yet to be seen. Will the US and the rest of the Western alliances come through and immediately put into force sanctions against Russia and a lot of the oligarchs and a lot of the banking system, and that would stop the money flow? Is Russia then going to, knock out the natural gas flow that's going into Western Europe and in the middle of the winter? And they're having really bad storms and it's cold. So a lot of factors, a lot of things could take place. We're now just going to work against what we have on an Elliott basis and the Fibonacci basis. So that I feel is going to be the best way to focus on what is actually going to feed it. I don't feel that that's going to be necessary. Elliott continues to show us with the Fibonacci that we're in a larger decline. And I have been discussing this larger corrective decline for quite some time and began in earnest to count it once the S&P got itself up to 4808 and the NASDAQ actually got to 16,768. Those were the highs for now. So if we're in the corrective phase that I believe we are, we're in a longer term corrective phase. There'll be plenty of trading, both directions. The corrective waves, as this volatility continues to unfold, will produce great upside moves and a continuing great downside moves. Depending on what your trading style is, there should be enough to do for everybody. So in other words, it's like, if you're looking because you want to do a swing trade and you either want to do it intraday or you want to put on a trade on a Monday for a Friday via options, that's all going to become available. And you're just going to have to follow the Elliott, follow where things are, and build your trade based on that. So there's still going to be plenty to do. Now, back to what we can expect. I am now looking that, this is our move back in after basically, we did, the US traders were able to trade yesterday during the globex session. And then again, this morning as globex concluded, that still remains the case, but this is now reacting to the latest, what's going on in the Ukraine. That's going to now follow through the Asian markets and then back over to Europe and then back over to us. So I'm not expecting rallies to be very strong just yet until this sub-minute fifth wave is complete. Now we got close to this 13,570 level. The low thus far is, let me see, come on, get right there, 580. So another 10 points and we've hit that one. And then I think we will drop below 13,500 so that we can finish this wave. The 100% number fits very cleanly for me. And that is kind of where I would be expecting wave 5 to equal wave 3. I bring us down to that level. So I'm not looking now, the lower numbers down into here, these 1, 2, 3, 6, 1, 3, 8, 2, those would be continuing for this minute 3. Now, is that possible? Yeah, actually, I would think it could be, but it might come in a little bit further out. And so that we're in that larger fifth wave, the minute fifth wave, as a part, so it might be more of a part of the minor third wave more than the minute third wave. So the minute third wave, I think we can get down into here. We put in a 4, then a 5, finish the minute 3. Oh, excuse me, 4 into 5, and put in a 4, and then that fifth wave, the minute fifth wave, brings us back down and gets us down to these levels. Then we rally again in a minor 4, and it's that minor fifth wave to complete either the C or this larger intermediate degree move. That would be the one I'm going to be looking for, 12,188. Okay, so that's the layout on this little bit longer term. Now, how long is it going to take to get there? Well, I would not expect it tomorrow or the balance of this week, but depends on how things escalate or de-escalate within the Ukraine right now. Because on the heels of all this, as we get ready to enter the month of March, is then we have to turn our focus back to what's going to be that interest rate rise and how much is it going to be? And will the Fed move as they need to, or are they going to continue to allow inflation to eat us all alive? So we still have a lot of things going on, which is why I'm going to continue just to focus on the trading, focus on the price action. So right now, the markets they're a little bit wide. Right now, they're about a point wide between bid and offer, and that's not unusual for globex. So I'm hoping that that would tighten up a little bit by the time our US regular session starts tomorrow morning. We shall see. So I believe that pullbacks will be minimal. Now, if we start to break back above 13,700, 13,800, it's going to be more conclusive that we likely have finished that sub-minute wave 5, and then for the minute wave 3, and we're in that little bit of a larger 4. I don't necessarily see that right now. Declines continue to be 5. The little bit of rallies continue to be 3s. That shows me that the trend is still down. We've not finished this fifth wave yet, I don't believe. Again, looking for support for that around 13,325. So the zone is 360 down to 325 to finish the minute, sub-minute fifth wave and the minute third wave. And then we get a little bit larger, nicer rally. It'll be a 3-wave rally, an A, advance, a B decline, and a C wave advance. That would then be minute wave 4. Then it's going to be that minute wave 5 that'll probably kick some butt and bring us all the way back down. So continue to trade using the moving averages. Continue to trade using the Elliott and using the Fibonacci. They have been very supportive and very insightful in terms of how deep the market's getting and how high it's going. It is working out extremely well right now in terms of where our pullbacks are getting up to and where these declines are coming into. All right, I'm going to leave it there. It should be an exciting trading day tomorrow. Try not to focus on the negative that's going on in the world. Focus on your trading and have a great, successful trading day. Next update will be on Tuesday, February the 22nd.